Right, hello, how are we doing? Um, I was in the middle of editing a video to upload actually, but I've just got a empty house, so I'm going to take advantage of it and record another video. Don't really know where to start. Just looking at my alerts. The one for Bumble come up. I don't know what to make of this company, to be honest, because I like how cheap it was on cash flows, but it is not doing very well. So maybe we'll come to that. Maybe we won't. I think what we'll probably do is just go down through the watch list. Pardon me. Go down through the screener, sorry, and see what we can come up with. I think we looked at WW International. Let me just check on here. This is my where I do my write-ups on the stocks. Yeah, I did look at it, so I'm pretty sure I passed on it. Weight Watchers, that's what it used to be. Let me see. Not worth trying, despite insider purchasing, high fund ownership. Oh yeah, there you go. Negative simple free cash flow per year, an average of 3 years, and even operating cash flow negative. Look, so we passed on that one. So we're going to pass on that one again. JXG. What I need to do, get the blue list up. Just scroll down and see what it is. Engages in design, manufacture, distribution of casual menswear. Okay, let's get it in ChatGPT and have a look. Explain. Oh, spelled that wrong straight off the bat. Sorry, just moved my microphone further in front of my face. And I spelled explain wrong again. Look. Explain JXG. Is it menswear? Ooh, ChatGPT's taking its time today. Pardon me. Stock split, look. 1 for 15, wow. And again, there's another one. 1 for 4. And another one. 1 to 10. And another one. This is obviously a common theme. Right. Pardon me. GTEC Luxventure Group, a company listed on started began and it still describes it engaging in design manufacture of casual menswear. Is it a fashion brand people know? Isn't widely known in the mainstream fashion circles globally. Its apparel operation is more niche and part of a broader corporate mix rather than a prominent fashion name. It is the Luxure one, isn't it? Yeah, Luxventure. JXG Lux Venture. Just to clarify for them. Operates in several main sectors. Tourism. Travel related services such as airline tickets, travel. Really? Okay. Publicly traded company headquartered in Haikoi, China. Is that say it on here then? Didn't go far enough. Yeah, it is. No tangible book either. Alright, might be passing on this one quite quickly, but we'll have a look. Fucking hell, I can't even spell that. Nothing on. Nothing coming up anyway. Alright, I'm going to pass on it straight away just because there's no tangible book or anything on it. And obviously, you look at this, it looks dog shit. Which, to be honest, is the area that we're normally searching for anyway, but I'm not really interested in looking into this if there's no way that I can get the balance sheet up on the SEC. This is supposedly listed in the US, but alright, GTEC. I've come across GTEC a few times. I don't actually think I've put it in my tracker, but oh, GTEC, no, not there. Oh, GTECs. GTEC, no, not there. All right, we'll dig into this one. Like I said, I have looked at it before. Got a funny feeling it's not a particularly good company. Signed underwriting agreement with Joseph Stone Capital. Is that taking on more debt then, is it? Because I got a funny feeling it wasn't profitable. Completed unwritten public offering of 5 million at 120. Okay, so that's higher than what they're at now. 4/5 of a warrant with whole warrants immediately exercisable at 120, including zero price exercise. And expiring 3 years from issue. The offering, which closed on, will generate approximately 6.1 million in gross proceeds. The company plans to use net proceedings for capital. I mean, pardon me. Okay, let's get the balance sheet up and have a look. I'm sure it's not particularly good. Let's get a new conversation up. Explain. Oh God, I cannot spell. God, I still can't get used to the microphone in front of my face. I probably need to sort out my audio options, put it a bit further away maybe, and then I can still see the bloody keyboard. Explain GTEC to me. What is it? Greenland Technologies, isn't it? Oh. Yeah, it says there. Right, what have we got here? Last 10Q. So what's this 8K? That's the wrong thing to click on when it's an 8K. Underwriting offering, that's what we were just talking about. We just read on there. That's a good thing about TradingView. It does pipe up occasionally with these events that have happened on a business. Okay, back. Let's have a look. Alright, 10Q. Last 10Q. What's an S1 then? I don't know. S1A amended. I don't know what half of these are. Registration statement. Okay, is this to do with this offering? Alright, anyway, back to the 10Q. Financial statements, balance sheet, we'll see what we got. If there's anything that I like the look of. So basically 100 million in assets, in current assets, only 123 in total. Um, 51 current liabilities, 53 in total liabilities. So what are, right, 4 million in cash, short-term investments, 33 million, receivables, wasn't inventory. Right, what's their debt? Was it the balance sheet was terrible with this, or was it the cash flows? So what we'll do, we'll drag it into the spreadsheet and we'll have a look. What have I got in here at the moment? HBK. Get rid of that. GTEC. Quarterly. Oh, wrong one. Income statement. Drop it in. Oh, God, I dropped it in the wrong place. What an idiot. Start again. Come on. A lot of mistakes on this video because I'm not doing it enough at the moment, unfortunately. I'd like to be doing it way more than I am. But unless I can somehow do this as a profession, this is the way it's going to be, I'm afraid. Enterprise value, negative. 15 million in market cap, is that right? Possibly. Tangible book value $3.8, and yet it's trading at 88. Free cash flow supposedly. So what's going on here then? This is very fishy, isn't it? A simple free cash flow supposedly 70 cents, and yet it's trading at 88. Just punched the microphone then, if you heard anything. It's going really well at the beginning of this video. This does not make a lot of sense, does it? The 86 million in revenues, TTM. For those of you who didn't know, my spreadsheet is a rolling TTM, so that's last 4 quarters and then the 4 quarters prior to 4 quarters prior. I do it on the quarterly, so it constantly rolls, so you can sort of gauge it against the same time in this point last year and the year before and the year before. Because some companies have like much stronger quarters than others, so you sort of want to be gauging it around about the same time every year. But something's not adding up, is it? Let's dig into this one. For 88 cents, you supposedly get 69 cents of simple free cash flow. What is going on here then? Produces transmission products and integrated powertrain modules, electric motors, gearboxes, and drive axles used in material handling equipment such as forklift trucks. I remember these. Critical components in factories, warehouses, fulfillment centers. Okay. Dear me, I can't stop coughing. Founded in 2006, so 20 years old. It's not like it's not, it's not like it's a spring chicken. Greenland positions itself as a provider of electric and clean technology solutions for heavy-duty industrial applications. It has expanded from mainly drivetrain transmission systems, electric vehicle. Okay. Company completed a public offering in early 2026, raising 6.1 million for working capital and general purposes. A move that can help fund growth, but also dilutes existing shares. Yes, we don't like that. Right, let's have a look on here a minute. On here. So they're saying that there's no dilution, but then that's probably, yeah, that's not soon enough to take into account the offering that's just happened. Small publicly traded company, often discussed by investors as a niche play. I don't want to break it down. I want to figure out what the fuck's going on. GTEC, Greenland Technologies. Just make sure the data's right. 19 million. 19.8 million. Dear me. What have I got it at? Market cap 15.3. So something's not quite right there, is it? Maybe the number of shares is wrong. I find that statistics, is it? Nope. It's here somewhere, isn't it? File, no. Where is it? What was on statistics? Why can't I find that? I'm sure it was on here. I don't know what they're using for their share account. Alright. I mean, it could just be a case that it's so small. I don't actually know why it came up on my screener. 19.8 million. It must have only just been big enough to come up on my screener because I got it at... Oh, I haven't got it. I had it at 20 million, so I need to put that back on. I didn't save it, obviously, when I did that. Dear me. So it's just under what my threshold would be. There's been some... look at that, 100% like 2 weeks ago. Bit fishy, isn't it? It's happened a few times as well, look. 85%. God damn it. Here as well, look. Huge spike. Strange, huh? Down here, what was that, COVID? Yeah, no. Yes, COVID was in this area, but it wasn't actually, didn't break down in COVID as a year before. Right. Any insider buy-in? Bloody advert. Oh, it's only a short one. Here you go. Free airtime on your advert, Yahoo. Sale, purchase, supposedly. Wang Peter. Look at that, look. Supposedly purchased and then sold at exactly the same time. So that's obviously not what it proclaims to be. Who holds it? Peter Wang, 100% of his portfolio. And then nobody else. Nobody else has got a remotely interesting size position. Look. Share account as well, look. Rocketed. Revenues have shrunk. Equity has shrunk. Creaky chair, I got a new chair, it creaks like hell. Tangible book value has shrunk. It's very fishy, isn't it? Let's what have I got as their total debt? 15 million. Supposedly was 60. Now down to 16. Cash was significantly higher. What's the free cash flow been historically then? Couple of years of extreme negativity post-COVID. Down here, sorry. So that's some questions then, I suppose, because it doesn't really make sense. What's their net income? Cash flow by operating activities, 7 million. Bloody hell, look at that. Payables went through the roof. Let's see. Working capital analysis. So they've prolonged payables, which obviously keeps cash on the books longer, which makes it look better. Inventory is staying on the shelf 30 days longer than what it was this time last year. And they're collecting sooner, so they're getting money in sooner, they're holding money longer, so the cash flow looks better than it actually is, when in reality they're just collecting faster and paying out slower. Inventory as well is also staying on the books longer. Okay. So there's definitely a bit of liberties being taken on the cash flow side of things. Net cash and used in investing activities. So what's happened here, look? 1.4 million down to 265. What's it done historically? Not really liking how this is panning out, to be honest. Yeah, 1.4 million, 5 million, 2.7, 1 million, 1 million. Data's missing there for some reason. But then it's dropped off massively. This is positive as well, which probably doesn't make sense that it should be. That doesn't really make sense either. Problem is sometimes with the data that I use, if the company's really small, there's not really sometimes there's not any checking on whether or not the data is correct. I have found instances where it's not correct, and I have contacted them and they have rectified it, so that's not a problem, you know, but you just got to be a little bit on it with the actual data sometimes. Right, what's going on with this then? It's trading for 0.88 cents, but supposedly has, what was it, 69 cents? 69 cents free cash flow, TTM. Low institutional coverage, yeah, and I get that. Low liquidity or low free float, 16 million to 22 million shares. Yeah. Doesn't automatically translate to higher stock price. Even though free cash flow is an absolute GTEC 6-month public offering, issuing 5 million shares and warrants. What is the new dilution then? Yeah, it's quite risky then. North American Chinese sales concentrated with a handful of customers. Operations in China and US dispel simple valuation. Okay. Increased stock comp. Oh yeah, come out of nowhere, look. Market doesn't fully trust sustainability or growth prospects. Dilution, what would the new dilution be? After the recent public offering, the share increased to shares outstanding, 4 million warrants. Each whole warrant is exercisable into one ordinary share, so you could end up. Each whole warrant is exercisable into one ordinary share. An additional criminal, so the share count could be significantly increased. 20%. Alright. Honestly, there's not enough here that I like. Just all looks a bit, I don't know. I wouldn't say untrustworthy, but I don't quite, nothing's sitting easy, you know? 69 cents in simple free cash flow. 67 in net cash flow, which is operating cash flow minus investing cash flow. 88 cents a share, but you get significant dilution. Revenues have dropped. Gross margins increased, but so has SG&A margins, so costs are higher. Operating margins got better. Cash flow from operations margins, TTM has doubled. Strange. Interest coverage. How can that be negative? That's so severely negative. Interest expense is so-called zero. So according to this, they got no debt. Let's see what Yahoo says their debt is. Balance sheet. Net debt. Total debt 21 million. Was 41. I don't like this. What I'm going to do, we're going to say no, because I just don't, I don't know, sometimes when things don't feel right, something doesn't feel right, you know, to be trading that cheaply against the cash. That what I need to do is this. Manual setup from 20 million is what I did last time. Right, so GTEC's gone. Let's save this. So the reason why I chose 20 million is when I've actually explained this in the video I was editing at the time. When I started this video, I mean, I was editing another video, so I was explaining it in that video. So it's going to be 2 videos in a row. But when I was looking through Michael Burry's early Value Investors Club stuff, like the average market cap and stuff he was looking at was really low. Like some of the stuff was like 25, 30 million. So dig in the weeds where they were and just see what we can find. My last screener that I was using, Monish Provide type screener, which was done on P ratios of like under 3. I'd exhausted and gone through, and there was nothing else on it, so I thought we'd have a look through a different screener, see what we can come up with. Sometimes as well, I will just screen from Open Insider on Insider Buying, but you do get a lot of crap as well. Mine, Alexandria Real Estate. Someone else has purchased another 1 million. Interesting. I will say, I don't tend to say this, but Alexandria Real Estate is in my portfolio. Only a small position, and my portfolio is tiny, by the way. Literally tiny. But yeah, Alexandria Real Estate is in it. So that is a welcome sight, actually, another insider purchase. 13th of this month. I purchased it before that. 1.4 million. Interesting, okay. Anyway, I have done a video on it, Alexandria Real Estate, on that investment. It is in the playlist, so if you want to find it, go and watch it. It is there. Tops. What is Tops? Top ship, international owner operated tanker vessels. There we go. I was looking at a tanker company the other day, wasn't I? This one here, PSHG. Thought it looked really good, other than the shareholder dilution is absolutely wicked on it. So another one here, interesting. Yes, have a look into this one. There is supposedly at the moment an oversupply of ships. Tanker ships, depending on the size of the vessel that they are using. PSHG, the one that I did like initially before I noticed the dilution was wicked, they were like Aframax and Suezmax sized vessels, and apparently there is an oversupply of vessels in that size of ship, which is not going to help the at least short term on them. But right, was it Tops ships? Explain Tops ships to me. I'd like to know how many size vessels. I already know from my last video that that is not what I'm asking at all. Don't care about horsepower. What the fuck happened there? The hell's tops compared to flops? Talking about tops, ships, the publicly. Oh, I spelled that wrong, right? Publicly traded shipping company. International maritime, crude oil, refined petroleum products like gasoline, diesel, bulk liquid chemicals, free messages remaining. What's going on here then? I haven't even had a long conversation. Interesting. ChatGPT's going this way. We won't be using it much longer. I think I mentioned it in my last video. Steve Eisman actually had a very good take on OpenAI and how it's going to compare to Google. Google's AI expense doubled from like 90 billion to 180 billion. Obviously, they've got the money to back that up. They've got other businesses that will bring them in, cash flow that can support that sort of spending, whereas OpenAI has apparently never made a profit, and it's all funded by venture capitalists. And if these venture capitalists realise that, hang on a minute, we're going to have to double our spending to keep up with the likes of Google and even Grok with X, then there's a good chance that they could all pull their money out, in which case OpenAI would just collapse. Not saying that is what's going to happen, but it was a very interesting take by Steve Eisman, and he thinks it was something that could very well be on the cards long term. But yeah, interesting take that was to listen to that, especially since I use it all the time. That's why one of the reasons why I sat down to watch it, because I was like, well, I use this. Let's see what's going to happen with it. It doesn't normally do this, mine. Tell me that I've got, so little questions left so soon. So that's something that's changed. That is not a good change. Anyway, where were we? Company's fleet consists of modern fuel-efficient eco-talent, including Suezmax, okay, and VLCCs, interesting. VLCCs are very large crude carriers, which is the biggest size that was in Monish Prabhai's investment thesis a few years ago now. He invested in a VLCC carrier, talks openly about it in loads of his videos. Interesting to go and look at. Let's see what we got then. SEC, hang on, because I am not currently, I won't be on this page. Tops. So it's a foreign issuer reporting. I think, I'm not sure, but I think that the vessels, when they value them, are relatively accurate in their value. There is a note there that we can look into. So 5 million in cash doesn't sound like, it seemed like a very big company. 5 million in cash, almost 400 million in vessels. It's got consolidated joint ventures. It's almost the entire assets are in the vessels. Liabilities 49 million, so it's way above. Current portion of long-term debt 16 million. But, I mean, it's way above current assets. Doesn't mean they can't pay for it in cash flow. $250 million in long-term debt. So it is all coverable in vessels. Got preferred. It's not great. They've got one preferred stock, have they? 20 million shares authorized, of which 100 see. Okay. 100,000 in preferred. Okay, interesting. A lot of these websites actually, if you look them up, it's gone. Press the wrong button. That's why it won't delete. Ops ships. Their websites will actually show you their entire fleet, talk you through their fleet. Eco West Coast. Didn't the PSHG buy one of these ships? Fleet. Let's have a look at the fleet. I am sure PSHG bought one of these vessels. So what have they got? MR2. Chemical tanker fleet. Only one Suezmax and 2 VLCCs. Look at the size of these buggers. Absolutely massive. Charter duration. What's this? Why is it showing us a map? Oh, they're showing you where they are, look. There's one here at the moment. That's pretty cool, the location of their vessels. That's VLCC, wasn't it? Where's the other VLCC? Julius Caesar. Coast of Saudi Arabia. MR tank. Doesn't change anything on the map. Unless I'm being stupid. Okay. Well, here we go. Who leases them? BP, Royal Dutch Shell, Cargill, Waco, Clear Lake, Norden. Okay. 50% owned. These two here. That's the joint ventures then, I would imagine, on their balance sheet. Fleet and charter coverage. Fixed revenue backlog for the firm. Time charter period of operating vessels included 50% of our joint vessels. About 264 million. What's this there then? Option. The option at the end. So they are time chartered. Does it tell you the price of their time charter? And you can sort of figure out investor relations. Let's have a look. PDF, tax information, presentations. 2018, way too old. Annual reports, 2024. So what's 2025? When was their 10K out? March, October, April. So what are they? Semi-annually. Happened here, look. Short squeeze or something. 4.5 million purchases in a day from 20,000. 22 million, but 284 million is a lot of debt then. That's what that means. Oh, PSG's there, look. PSHG. That is, sack that off. Annual reports, presentation. Just going to look at last year's annual report then, aren't we? Literally just going to scroll around through it annoyingly till we find any sort of resemblance of. It's going to be a shit one to look through if ChatGPT is being a bit of an asshole. PSHG was a lot easier to look through and a better website as well. Just get the presentation bang off the bat telling you right. Let's have a look at the cash flow anyway. Operating activity is negative. Oh, it's investing activities. So their operating activities positive, investing activities negative. So they paid for vessels under construction. 17 million in financing activities. See income, like total revenues 43 million, voyage expenses of 1 million, operating leases, other vessels operating expenses, net income 7 million. Interest expenses about 10 million a year. Are we going to be able to find anything on their debt though? Must be able to. Current portion of long-term debt, note, what's that, 7? We've got vessels 4A, let's have a look. Notes details. Vessels, is this 4A? 6K, see if we can find the actual thing. See if it's broken down for us here. Vessels 4A, here we go. Vessel costs 409 million, depreciation 47, net book value. How much is a VLCC? Google can tell us this. It told us this last time. Last second and sold VLCC price. Recent second-hand large VLCC sales hit high prices with a 9-year-old vessel sold for 111 million. So they got 2 of them. Scrubber fitted, whereas this one wasn't. So 111 million. Q1 of this year. So they got 2 with scrubbers fitted. Fleet list. Let's say 22 is going to have to be in it. 2022 built. So they probably are up to date with scrubbers fitted. So they would be 300,000 deadweight tonnage. What was the ADNOC Logistics sold off a 9-year-old VLCC for well above market levels and its book value. And yet, there you go. There's one in November sold below. $300,000 tons, so that is the same. So are we saying they're worth like 200 million each? Did not name the buyer. What was this one here that sold then? 57 million, 1 million below the vessel's latest valuation. Okay, so it's not bad. 15 years old, mind. So significantly older. Interesting. Okay, so they potentially got 2 ships worth 200 million. Potentially. Let's close that because it's head not tail with that. So anything on here? Any insiders? No, it won't be because it's foreign company. Tops. Not there, look. Find that then. Okay. No results found. That doesn't help. So the Suez Max is how old is this vessel? 2022 again. So one of them sold for about 33 million, I remember, from the PSHG one. So you've got potentially, let's be conservative and say you've got about 200 million in vessels. Their debt is so cool. Let's have a look at their debt table. It also depends on when it's due. Total long-term debt. Doesn't say, does it? Yeah, that's a bit shit. Long-term debt, current portion of long-term debt. So on the balance sheet, let's have a look. On the balance sheet, current portion of long-term debt, 14 million. On the cash flow statement, yeah, this is a 6 one, isn't it? Not the 10. 64 million, 6. Wow, look at that, mind. Oh, it's gone up significantly. It's the wrong way around to what I'm used to reading it. So they've made that just in this 6 months to cover the current portion of long-term debt. Financing activities. Proceeds from debt, so they took out debt. Possibly to buy a ship. Same debt thing, total long-term debt. Exactly the same debt. That is the same over here. Doesn't really help, but it's not as clear as the PSHG was. Charterers, obviously we know who they are. Fleet charter coverage. % fixed per annum. So what does this mean? They're 100% covered for the all the way up till 2020. So this year, next year. So called 70% so far. But it doesn't say what the price of their bloody time charters is. So I think I'm right in saying that a time charter is the minimum that they can get paid, I believe. This is certainly a lot harder to decipher than PSHG was. Daily rate of 18,000, contributing roughly 20 million in gross expected revenue for one of its product tankers. Planning a spin-off of part of its fleet, specifically some Suez Max tankers, and a new publicly traded company to unlock shareholder value in separate operations. Right. Explain its long-term debt. Yeah, I get that. I want you to break it down. You're just talking something changed with bloody ChatGPT, because it's just talking in generics instead of specifics. I want you to break it down. That's what you would do historically. Note 7. We're in Note 7. Oh, hang on, for the year, so. Okay, so you need to get the 10K up. What's going on here? Oh. Not 10K though, would it be? No. Still be a 6K or 20F, that's it there. Site can't be reached. Oh, yeah, it can. There we go. Right. 15 million a year for the next 3 years. Doesn't break down post that. 200 million thereafter. Operating expenses of the vessels. So about 18, that's quite there. 19. So what was the debt then? Is the debt correct? Yeah, it was 2024. Okay, so for the next few years at least, debt appears to be on cash flow, manageable. I know this is old now, but 2024. Now they swapped it around there. Net income 5 million, vessel depreciation 13 million. So net cash provided by operating activities 17 million. Investing activities 12. So they made 5 million in free cash last year. But acquisition, note 5. Where's note 5? What would that be? Get it up and have a look. There's a significant portion of that looks to potentially be an acquisition. Note 5 we want. Where's this? Note 6, we want out. Note 5 is a big one. Note 5? Advances from asset acquisition from related parties. Asset acquisition. How many times is it mentioned? There it is. Letter of intent. Mega yacht. Honestly, I'm just going to pass on this one because this is way more of a rabbit hole than PSHG was. PSHG was very to the point on what its time charters were, what its vessel availability was. Finding the data was much easier. Anyone talking about it? $2025. Okay, price alerts. Short-term opportunity, not long-term. He was hold before that. Historically hold, strong sell. Just one guy talking about it constantly. Greece-based tanker operator, top ships, rallied after the company announced a spin-off of 2 monsters tankers into a new company. Right. Honestly, I'm going to move on from this one because it ain't simple enough for me. PSHG was very simple, and Top Ships doesn't appear to be, and their website is not as good and not as informative. Their press releases are not as informative. So I'm going to leave it and move on. VLCC's a couple 100 million in it, but they've also got a couple 100 million in debt. Possibly making some decent money, but what's the share price done? Not a lot. And this I don't like. This is strange. Is that when the spin-off was? But I don't know. I'm not going to guess at it. Let's just move on. New Skin Enterprises. Development, beauty and wellness solutions. Tangible book of 14 per share. Okay. Let's have a look. NUS. I'm going to have to stop this video in a minute, so I'm going to have to go and pick up the kids. Interactive data 10k, so that's the last one. Balance sheet. Total current assets 500 million, cash and equivalents is half of that. That's pretty good. Property and equipment 400 million-ish. Okay. Total liabilities of only 600 million, long-term debt 200 million. So the balance sheet is pretty good. Operating activities, oof. Proceeds from the sale of a business, okay. So they've had a hell of a year this year because they sold a business. Payments on debt. So they've paid off. Let's have a look then. That's the long-term sold off business. Have they paid down debt? Long-term debt, yes they have. Quite significantly. So what did interest expense do? No, what are we doing? There we go, wrong one. Interest expense halved. Okay. I will go and get the kids, unfortunately. I will probably come back to this video instead of leaving this video here because we've potentially stumbled across something that might be worth looking at least briefly. So I will see you in a second because that is the power of video. All right, in a minute. All right, I'm back. I have already dragged the stuff for NUS into SEC website, into ChatGPT, and into my spreadsheet to have a look at. So basically new skin, anti-aging products, facial cleansing devices, serums, creams, masks, dietary supplements, weight management products, vitamins and wellness products. So the age lock line, no idea what that is, I've never heard of it, but multi-level marketing structure. Individuals sign up as independent distributors, often called brand affiliates. Oh dear, they earn money by selling products directly to customers, recruiting others to join and earning commissions on their sales. I don't like this sort of crap already, I am. Multi-level marketing is always rings like, not that it is, but it always rings like pyramid schemey to me. Small percentage of distributors earn substantial income. Many earn modest amounts or little profit after expenses. Predominantly in Asia by the look of it. They do 50 plus countries, but China, South Korea, Japan, Southeast Asia. There you go, Asia has historically generated a large portion of the company revenue. Yeah, there you go. Multi-level marketing companies, new skin has faced regulatory scrutiny in some countries, criticism, compensation structure, questions about income claims by distributors. Honestly, already – probably going to say no to this. Yeah, it's not the sort of thing that I like. You don't buy from stores, you buy from a distributor, and that distributor may recruit others into the business. Like, oh, honestly, not keen on that. I don't understand how compares to companies like Herbalife. Okay, well, Herbalife, obviously we all know about that. Carl Icahn and Bill Ackman had a big hoo-ha about it. Ackman believed it was a pyramid scheme. Carl Icahn obviously went the other way. Quite a big hurrah about all of that. I don't really know, like, property, plant and equipment on a multi-level marketing. Like, well, let's have a quick look into it, but I think this is a no already. Just the type of business. I don't like this type of business. Property and equipment tables. What is it? Land, buildings. So they're saying that they are like tangible assets, at least furniture and fixtures. Like, first thing you got to do is look for downside protection, and furniture and fixings in a fire sale. It's not worth a lot, is it? Computers and equipment, again, probably going to lose quite a bit on that. Buildings, all right, fine. 300,000. What's the total debt? Let's have a look. 200 million in cash. 40 million in receivables that are so-called net, but let's say 20 million. So what have we got there? 260 million in cash and equivalents and receivables. Inventories in a fire sale, what's that going to be worth? Like 40%, 50%. Say that's 90, 240, 30. I don't trust this though. Like, whose buildings? Are they just using their distributors? That could be a bloke in a house, and then they're, are they potentially putting his house asset onto this? This is why I don't like it. See, it's too much up in the air. What did we say? 330. What did they say was the buildings? Supposedly 300. So you're looking at, I don't know, let's do 250 maybe. I already don't like this, to be honest. 580 in assets, tangible assets. There you go. There's no downside protection, and if you subtract the total liabilities, long-term debt, accounts payables, they're supposedly got gross margins of, I mean, they are declining. They were high 70% down to high 60s. Revenues have fallen off a cliff, really. They lost their 1.2 billion. Supposedly earning 45 cents a share, even at a 10 times multiple. Saying it's a good business, pretending it's a good business. It's only $4 a share. It's not for me. 165 in CFO. Average is dropping. It was supposedly $3 a share. 3-year average simple free cash flow. This one here. 285, 248, 91, 95, 85. Seems like a decline in business, doesn't it? And currently is trading at 20 times simple free cash flow on the market cap. And I normally do stuff by EV. Enterprise value as well, supposedly. Okay. It's halved because the enterprise value multiple doubled because the simple free cash flow's halved year on year. All right, I'm going to pass on this one. It's just not the sort of thing that I like. But what's good about this is it shows you that you can say no very quickly. What's this? Since I've been back on 6 minutes, according to the OBS thing down in the bottom corner. So within 6 minutes we said no. So you got to be able to say no quick. Most probably reckons in a couple minutes, which I'm sure if I can go down the process of downside protection first, that's what I want to see. I'm sure you can get that down to 2 minutes very quickly, to be honest, if you were only focused on the balance sheet and then trying to figure out if it gets to downside protection, maybe then figure out what the business does. If I want to start saying no faster, might be the way to go. Supposedly $30 worth of revenue a share, which obviously makes the price revenue to EV quite low. That O'Shaughnessy book reckons that price to sales is one of the main metrics. If you've got low price to sales, then that's one of the things that return the best over the course of their experiment. I just don't like this multi-layer marketing thing. It's not, I don't know, it's just not the sort of thing that I like. It could be a perfectly legitimate business. I'm not saying that it isn't, but I'm not keen on it. So I'm just going to leave it at that, I think. Yeah, there we go. All right. I'm going to finish this video here. Try and get another one up quite quickly. We'll see. I did notice when I was editing the last video that I just put up, I did say at the end of that I'd look at HPK, and I didn't do on this video, so maybe that's where I'll go next. First thing on the next video, I'll put a note down to myself to start on that one, although I don't think it's actually... Is it on my screener now? Oh, is it? Yeah, okay. Ooh, a little bit of a reversal going on here as well, look. So, is it an energy play? Was it energy? Independent oil and natural gas company. Yeah, all right. Maybe we'll start the next video on that. But I'm going to leave this one here. There's a lot of waffle in the first one, like the first portion of this video, but got a bit back on track, I think, with this NUS one, going back to saying no quite quickly. I don't generally put a red tag on things unless there's zero chance that I want to come back to it, and I think this one, just the type of business that it is, just to remind me that in the future there's no point in even looking at this. What I would do, look, is just put a quick note here: multi-level marketing company. And that way, if I ever come back to it, let's say, hey, look, I got a little thing, and then I'll be like, nah, I'm not interested in that. Because sometimes I do come back and I look at it and think, why have I put a red tag on that? There has been a few companies that I've looked at post red tag, and you know, you're talking like six months later, a year later, and all of a sudden I'm like, well, why have I done that? Because this company looks all right. But this one, multi-level marketing company, for me, I'm done with this one. I probably won't come back to it when it comes up in the future. It could go on and become an absolute multi-bagger, but it's got to be a type of business that you're willing to invest in, and I'm just not. I don't like this sort of business, so we'll leave it there. Thank you very much. I hope to see you on the next one. I will try to remember. I'll make a note to go into HPK. It's the first thing we do in the next video. All right, thank you very much, and I'll see you on the next one. Goodbye.